Welcome back, future accountants, to Apex Ledger. Today we are diving straight into ACCA FFA Chapter 1 Introduction to Financial Accounting and the Accounting Equation. Whether you are completely new to accounting or gearing up for your exams, this masterclass breaks down the core principles, IFRS standards, and the universal mechanics of the double entry foundation. Grab your notepad and let's unlock the universe of financial accounting. Let's start by establishing the boundary between financial accounting and management accounting. Financial accounting. It is primarily built for external stakeholders. Think like investors, banks, suppliers, and tax authorities. Because outside parties rely on these numbers to invest their capitals, financial accounting must follow strict rules, the IFRS standards, and the IES conceptual framework. Its main outputs are the statement of financial position and the statement of profit or loss. Now, on the other hand, management accounting is built strictly for internal managers to plan, control, and forecast future operations without rigid legal templates. Now, for the cornerstone of all global accounting, main accounting equation, that is assets is equals to capital plus liabilities. Capital is also known as equity. Its alternative form is capital or equity is equals to assets minus liabilities. Let's define these elements under the IASB framework. First one is assets. Resources controlled by the business as a result of past events that will generate future economic benefits like cash, receivables, property, machinery, or inventory. Second one is capital or equity. The residual interest in the business belonging to the owner, and capital is calculated as opening capital plus profit minus drawings plus new injections, and it's too important, so try to keep this equation in your mind. Now the third and last one is liability. Present legal obligations arising from past events that require a future outflow of resources such as bank loans, trade payables, or accruals. Now, let me break down this concept with just a casual example. That is, if you buy a 1,000 rupee football using 600 of your own pocket money and 400 borrowed from your dad, your assets is 1,000, your capital is 600, and your liability is 400. As you borrowed from dad, it's your own money, and this will be your assets, which is satisfying this equation. Impact of transactions. Listen, most students get terrified the moment they hear debit and credit. Forget confusing dictionary definitions right now. In accounting, debit simply means the left side and credit means the right side. That's it. If you take a real life example, think of your favorite local cafe. If they buy a $2,000 coffee machine with cash, what happened? Did an asset enter the business? Yes, that is machine means debit. Did an asset leave the business? Yeah. Cash. Credit. Simple. Nothing disappeared into thin air. Every transaction has two hands. One gives and one receives. That is the dual accept concept. To master every single double entry, you only need this 6-letter cheat code, dead click sheet rules. Let's break down the first word, which is dead. This means debit increases expenses, assets, and drawings. So, whenever your business buys machinery, pays rent, or your withdraw personal cash, you simply debit that account to increase it. And if it decreases, you do the opposite and credit it. Now, look at the second word, which is click. This means credit increases liabilities, income, and capital. Whenever you get the bank loan, earn sales revenue, or invest fresh money into the firm, you credit that account to make it go up, and if it decreases, you debit it. Just remember this golden rule. Debt increases on the debit side and click increases on the credit side. Master this one simple rule and you will never make a mistake in double entry again. Alright everyone, look at question number 1 on your screen. The ACCA examiner is going to test your exact conceptual clarity here, but we are not falling into the trap. The question asks which statement correctly defines a liability under the IASB conceptual framework. Look at option A, economic resource control, that is an asset, cross it out immediately. Option C is equity, the residual interest. This will also goes in same section, that is cross. The correct answer will be B. Lock down these three golden examiner keywords: present obligation, transfer of economic resource, and past event. If something happened in the past and you have an unavoidable duty to transfer economic value today, that is a liability. Mark secured. Now check out question number 2. A business has total assets of $145,000 and total liabilities of $48,000 at the end of the year. During the year, the owner introduced $12,000 capital and drew out $5,000. What was the net profit earned by the business during the year if opening capital was $70,000? It's a classic numerical problem where students easily get confused. But watch how fast we solve this. At the year end, total assets are $145,000 and liabilities are $48,000. Our step 1 will be find closing capital using assets minus liabilities formula. The assets is $145,000 and the liabilities is $48,000. After subtraction we will get $97,000. Now just apply our dynamic capital formula, which is closing capital is equals to opening capital plus profit plus injections minus drawings. Now here closing capital is $97,000 and the capital is $70,000 given in question. Profit we want to drive. Injections are $12,000. Drawings are $5,000. Now just after simplifying this, we will get this: $97,000 is equals to $77,000 plus profit. Now just after doing the last step, profit is equals to $97,000 minus $77,000 is equals to $20,000. So our correct option will be B, $20,000. Now question number 3. A business purchases a motor vehicles for $15,000 and paying $5,000 cash as a deposit and securing a bank loan for the remaining balance. What is the net effect on the accounting equation? Don't guess, break it down by side. Asset impact. Motor vehicle increases by $15,000 but cash decreases by $5,000. Net asset increase is equals to $10,000. Liability impact will be bank loan creates a new payable obligation or debt of $10,000. So net liability increase will be $10,000. So here equation is balanced. Both sides increases by exactly $10,000. So the correct option will be B. Assets increase by $10,000. Liabilities increase by $10,000. Dual entry always preserves perfect balance. Now look at question number 4. Which user group requires financial information primarily to assess the solvency, liquidity, and security of their loans? Here just think like a banker. If you lend money to a company, your primary focus is whether that business can generate enough cash flow to cover its interest and repay the loan on time. The option number A is saying about shareholders. They look at dividends and profit. Option number C is talking about government and tax authorities. They verify tax compliance. The option B, lenders and financial institutions, focus strictly on solvency and repayment security. So the correct option will be obviously B. Keep that user matrix logged in your memory. Now, for the final master workout, the complete year-end verification for Zenith traders. Zenith started the year with $50,000 cash. During the year ending 31 December 2026, earned revenues of $85,000 collected in cash, incurred expenses $52,000 paid in cash, purchased equipment for $20,000 on credit, owner withdrew $8,000 cash for personal use. Now, your question is asking for calculate the closing total assets, closing capital, and total liabilities as of 31 December 2026. Let's solve this. So after adding every cash, we will get $75,000 at the end of the year, and the equipment asset was $20,000. So after adding these, we get $95,000. Now trade payables liability was $20,000 and closing capital was 50K plus 33K profit minus 8K. After solving this, that will give us $75,000. So after adding these two, we will get $95,000, which is perfect balance on both sides. And that is a wrap. You have officially concurred Chapter 1 of ACCA Financial Accounting. Drop your quiz score and any questions in the comment below. And if you want notes, equation worksheets, you can join our WhatsApp channel, link in the description or in the comment section. Thank you very much, accountants. See you in the next one.